Good afternoon. It is 1 o'clock on April 24th, the last Wednesday of April 2019, and we're in for another installment of the Thriving Agent webinar series. I'm going to give it a minute here for folks to join us and then post some questions, hopefully. I have a quick PowerPoint presentation that I put together that hopefully you find worthwhile. It was something that occurred to me yesterday as I was reading someone else's information, and like I said, I'll give it 3 minutes or so, and then we'll get started. Okay, we may as well get started. So today is the last Wednesday of April 2019, and on April 16th, or whatever the day after tax season is, I generally say Happy New Year. So Happy New Year. As accountants and tax professionals, sometimes our new year doesn't really begin until after the tax filing season has ended, or at least the first rush. We prepare tax returns and deal with tax issues all year long, but the primary rush is the April 15th deadline. And some of those extensions, or some of those returns, get extended until September. Some of them get extended until October. So in your line of business, it's not uncommon for me to come in contact with real estate agents who have no idea how their business did last year until they file their tax return. So it's unfortunate that you could go almost a whole year without knowing how your business is doing. And we want to try to short circuit that a little bit by helping you improve your bookkeeping, have bookkeeping services that are done more regularly, so you have some information to run your business. In my presentations, I talk a lot about having a profit and loss statement that you can use to compare to previous years or previous months, so that you know and have tools and have a guide for making business decisions. And the example I usually use is marketing. If you know that your marketing expense is running 15% of your revenue or your commissions, is that good or bad? Well, if you compare it to maybe last year and your marketing costs were running 8%, what's different? Well, maybe you've spent more money on marketing a problem property, or maybe there's just a timing difference. You just haven't been paid for a sale yet, but at least you have the information. The other thing it does is give you the tools to create better estimated tax payments, rather than simply taking last year's tax and dividing it into 4 and paying that in each quarter. Now you have real results that you can use to measure and create a better estimate, a more accurate estimate, so that you're not overpaying or underpaying dramatically. So the presentation that I put together today was based off of a comment or a post that I saw yesterday, and it dealt with 2020. And I don't remember if they specifically talked about it or if I put 2 and 2 together, but 2020 is next year. And when we think about 2020, we usually talk about vision, right? So we have 2020 vision or some something that's based off of that. And so I put together this quick presentation, this PowerPoint presentation that hopefully you find useful and empowers you to make changes in your business. So when we talk about hindsight, and if hindsight is 2020, what is foresight? What is the ability to look into the future? Is it speculation? Is it gambling? Is it wishing? Is it guessing? It's all those things, right? But what if it could be something other than that? What if foresight is planning? It's taking a look at what you want to happen and making arrangements or planning for some of those things to happen, or maybe all of those things and more to happen. So when we talk about planning, what does it do? And a lot of times I talk about tax planning, and that is arranging your tax affairs in the most tax efficient manner to pay the least amount of tax allowed by law. But planning in general, it puts you in the driver's seat. It allows you to control where you're going. You get to determine what the results are that you want to achieve. Planning allows for you to put the things into place today to achieve those results. Again, whether it's tax planning or reduction in taxes, or maybe a vacation, or maybe it's retirement, preparing to retire, or preparing to sell your business maybe. It allows you to call into existence the world into which you want to live. It allows you to create something that doesn't exist yet. It gives you the power to do that. That's what planning does. Planning allows you to control the outcome. The outcomes are not settled by chance or circumstance. Things don't have to happen by accident. Unfortunately, a lot of times that's how we go about business or go about our lives. It's just taking things as they come. With planning, you have the ability to put into place and create what the future is going to be without being too dependent on random outcomes or chance. Planning puts you on the offense. You're carrying the ball. Why not let others chase you? If you know where you're going, you have a better chance of reaching your goal rather than taking things by chance. You don't have to always be on the defense and take things as they come. You get to decide. You're on the offense. You get to run the play. You get to decide what play you run. So what is your 2020 vision? Begin planning it now so that you can put the things into place that will help you achieve that 2020 vision. Begin executing that plan now. The sooner you get started, the more likely you are to achieve those goals. And start seeing the results now instead of waiting for them to happen a year, 18 months, or 2 years from now. So that's my 2020 vision spread PowerPoint that I put together on short notice even. Hopefully you'll have some comments about what your 2020 vision might be. I'd love for you to share them with me, and we can help you reach those. Put things into place that are designed to help you get there, whether it's tax planning, saving for retirement, preparing to retire, whatever it might be. Maybe it's putting a child through college. Whatever that might be will help you get there. Let's see if I have any questions here that have popped up. Not yet. So I put this link out here, and this is a link to a program that we will be participating in June. And if I can switch my screen here, I'll get it to pop up for you. It's called the American Dream Experience, and it's going to be in Cincinnati, Ohio, at the Duke Energy Convention Center. It's designed to help people rediscover what their American dream is, help them put into place the things that will help them achieve and reach that American dream. I don't think I'm going to be able to share that page for some reason. I think I have it open in a different browser. I just don't think it's going to open. So I'll share more about that as we get closer and send you an actual invitation to the American Dream Experience. You can come as my guest. It's free. It's June 28th and 29th. There will probably be a reception on the 27th. here in Cincinnati, and I will be taking guests to dinner on that Friday night, the 28th. We haven't decided what restaurant we're going to go to yet, but um, uh, I invite you, and I invite the people who are important to you and live inside your American dream, whether that's your parents, your children, your extended family. Come and join us for this program. It will be potentially life-changing. I've talked to other colleagues who have done this on a smaller scale, and the results for the attendees are, in many cases, overwhelming. I did the program in January this year, and unfortunately, it was the Saturday that we had the major ice storm, so the attendance was not what we had hoped. We had 28 registered, and I think 12 were able to make it. We'll do this on a smaller scale, probably later in the year, but I want to get as many folks to the June program as we can. So I got a question here about business entities. This is a standard question. Should I be an LLC or not? Well, in most cases, I suggest that you talk to an attorney, because the first step is really more of a legal issue than a tax issue, because forming an LLC does not change your tax filing responsibilities or the tax form that you file or the amount of tax that you pay. An LLC puts a wrapper around your business, or maybe more specifically around your personal assets, that slows down the possibility of a predator getting in and suing you. I generally recommend that new agents, or any agent really, at least have an LLC to provide some level of protection, but I do suggest you talk to an attorney about that. In the state of Ohio, they do not allow, the Ohio Bar Association does not allow CPAs to form business entities because they see it as a practice of law. But once the LLC is established, it gives you a foundation on which we can make some additional changes or tax elections as your business grows. Generally, you may stay in LLC for either a short period of time or for even a couple of years, depending on how rapidly you want your business to grow. Once your business reaches a threshold where it makes sense to make an election, we'll potentially have you file as a corporation or an S corporation, attempting to reduce your tax liability and potentially put into place employee benefits that are most beneficial to you. But those are dependent on your specific situation. They're dependent on all of the factors that are going on in your life. In some cases, an S corporation can actually be detrimental. The example I used a couple of weeks ago when I was speaking for a group of agents was a small business owner who came to us after the fact, unfortunately, and their tax professional had them filing as an S corporation. What they didn't take into consideration was that the taxpayers had a special needs child in their family, and the out-of-pocket medical costs were substantial. Under an S corporation, you cannot set up something called a medical expense reimbursement plan for owners of more than 2% of the S corporation. So there was no way for them to create a situation where they could write off as a business expense all of the medical costs. Had they not made the election, had they just stayed a single member LLC, they could have established a medical expense reimbursement plan. They could have, if they could have hired a spouse, they could have established a medical expense reimbursement plan for the spouse employee and created a situation where all of the medical costs may have been able to been treated as a business deduction, not only reducing the self-employment tax, which is all the S corporation does, but also reducing the ordinary income tax and giving them an outlet for all of the money they're going to pay anyway. Making tax planning changes is not always about changing or reducing the dollars that you pay out for the things that you're going to buy anyway. Sometimes it's finding a way to create a scenario that is more beneficial for you as a taxpayer. That's legal, moral, and ethical. It's allowed by the tax code. It's been court tested if it's ever been tested, and strategies that are designed to specifically save you money. It's the one thing that we do that we can guarantee results in, and that's tax planning. It allows us to put into place and suggest strategies that are guaranteed to save you money. If you do this, you will save money, whether it's a medical expense reimbursement plan, saving for retirement, business entity structure. It could be any number of different things based on the situation you find yourself in. So that's forming your business entity. And I have written a book. I don't have it within arm's reach at the moment, The Entrepreneur's Guide to Forming a Business Entity, that goes through all of the various entity types. Now, it has not been updated for the Trump tax changes, but the information is still valid. The primary difference is that it does not cover the small business or the qualified business income deduction that came into effect, as well as some of the depreciation differences, but those don't really apply to different entities. The qualified business income deduction applies to pass-through entities. It does not apply to C corporations. We may have a short call today. If you have questions about the 2020 vision or have suggestions, what is your 2020 vision or your vision for 2020? I think it's a great time to think about that. We're 3.5 months, almost four months into 2019. The best time to do tax planning is early in the year so that you can put into place the strategies that are designed to save you money for the remainder of the year. And obviously, the sooner you put into place planning strategies in general, the more time you have for those to work. It's like investing. It's not just being in the market. It's being in the market for a long period of time. It's time in the market. Well, I've got 17 minutes after, and I'll give it 2 minutes, and then we'll move on and do another month. We'll be back on May. What's the date? On May 29th is the last Saturday in May. Okay, I'm going to call it. It's 18 after on April 24th, the last Saturday in April 2019. And this has been a production of Financial Clarity Group and the Thriving Agent webinar series. Please contact me if you have any questions, and I look forward to talking to you soon. Thank you.